Hey everybody, it's Dean over here at The Way Podcast. And as usual, our goal here is to empower, equip, and educate the way lending should be done. And I say that all the time, but this time in particular, I'm super excited because Ryan Grant from Neo Home Loans is here. And the fact of the matter is he does that better than anybody else in the whole industry. So Ryan, welcome to the show. Super excited to have you here. So for those of you that don't know, Ryan was an Orange County local just like me, and now he's gone. And I got to say, the market's opened up. All of a sudden, the rest of us are making some money over here, which is great. But he is over in Utah now, and he has got a much larger mission. And Ryan, I want to kind of do a few different things. One, I want to ask you, who are you today, both personally and professionally? Then I'm going to take you all the way back to day one when you first started. And I want to walk back through your journey to today again. So tell us a little bit about who you are today, but leave out a lot of the good stuff because I want to do it at the end of what you've done over at Neo, okay?
Sure. Yeah. So I am a father of two incredible little girls, a husband to Bran, who, I've been fortunate to be with now. It'll be 11 years in a couple days. We got our anniversary coming up, and really focused right now on kind of leading and influencing the industry and in our collective group, both in Neo and in our Loan Atlas community, to just see ourselves differently. So the communities that we serve see us differently. I want society to see mortgage lenders in a different light. And so that's a big part of what I'm trying to accomplish right now is I want to change this industry so we don't have to be what we've always been.
It's funny because it's what I'm trying to do. It's what I'm preaching to everybody. And the reality is you guys started it. And I'm not going to deny that I'm piggybacking off of a lot of the stuff that I see you guys doing. But the only reason why is because it's awesome, right? I mean, it is the way lending should be done. And I would love nothing more, I think you as well, as when we're gone one day, is for our legacy not to just be with our family. Like we have one there that we want, but also in the industry. I think it's super important. And I would love for everybody to think of a loan officer or a mortgage professional as they would their financial planner, right? Somebody of respect and high level value.
Yeah, we just have to step into that and earn it, right? It can't be something that we just, like right now with the whole NAR settlement, I see a lot of real estate agents that are saying, we need to, we can't be real estate agents, we need to be real estate advisors. And it's like, well, that's great. We can't be loan officers, we have to be mortgage advisors. Changing the title doesn't mean that the consumer is going to see us differently. If it helps us see ourselves differently and act differently and, learn more and be able to add more value, that's great. But we need what I found is it's hard to change your stripes, especially if you've been doing this for a long time. Some people don't want to, and some people really want to and find that it's still really challenging. And so we're definitely pushing a rock uphill, but we're getting there. It's day by day, I can see the tide start changing. I can see mortgage professionals really start to reinvigorate themselves and find that fire and that passion again, because they realize that their impact can be so much greater than it has been.
Yeah, I agree. And I can't wait to get through your journey, because I think we'll be able to clearly see how and why you got to where you're at today. But before we get to day one, I want to just throw out a couple quick questions for you. One, as a mortgage professional, right? I know that you are always trying to better yourself, right? You're always somehow educating yourself, whether it's through books or mastermind groups or whatever it is. But I want to start with the book. Is there a book that's like impacted your life or changed your life somehow?
Personally or professionally?
Both.
I would say that there's two books professionally. One is The Challenger Salesperson.
Do you know who wrote that one?
It's the one I don't have behind me. I don't know the author offhand. The premise is that there's 5 different types of avatars of salespeople in our business, right? Or not our business, but in any sales business. And everyone thinks that whoever has the best and most relationships wins, right? Like the best relationship person is the best salesperson. And this book completely debunks that myth and states that the challenger salesperson, or the person who adds value people didn't know they needed, solves problems they didn't know they had, provide solutions into the future that they weren't expecting. Like that person outperforms every avatar of salesperson. And that's really what we've strived to do really since 2018 moving forward and everything that we've done. The second book is The Infinite Game from a professional perspective by Simon Sinek. It's kind of like the genesis of Neo Home Loans, kind of what we built and philosophized the company on. There's so many great things in that book that I think I've read it 5 or 6 times now, and I always go back to it to kind of like make sure our compass is always pointing in the right direction. Personally, from a leadership perspective, Extreme Ownership is one of my favorites by Jocko. And then The Entrepreneur Roller Coaster and The Compound Effect. I kind of see those as almost one and the same by Darren Hardy. Those would be the ones that I feel like I always kind of go back to for my true north.
Yeah. Just last week, we interviewed Todd Bookspan, and his was The Compound Effect. Great book. Okay, so then how about a quote? I personally, I'm always, if I see a good quote, I always save them and like them. Do you have a quote that you love?
Yeah, it's one that drives me every day. I think about it. I talk about it a lot, which is, the definition of hell is when you die, the person you are meets the person you could have become at your fullest potential. That one both motivates, inspires, and scares me all at the same time. But it helps me make sure that I'm not really, taking anything for granted. I'm not coasting, that I'm always trying to be the best that I can be in every category. It's definitely more of a compass than a map, but it still helps.
Yeah, it's a great one. All right. Day one. What was day one? When was it? Where was it? Why was it in the mortgage business?
Yeah, I was enrolled in law school. I was going to go to law school down in San Diego. And I didn't really want to be an attorney, but it was the only thing I'd ever studied for or practiced. I studied it in college. I was, worked for attorneys. And I didn't have enough money to pay for law school at the time, so I had to take a year off just to work odd jobs. And my future brother-in-law calls me. He says, "Dude, I made a bunch of money in my first month at a mortgage company." And I was like, "What's a mortgage? And is there one of those companies near me?" Because I just thought, well, if you can make that in your first month, then maybe I can do that too. And, I can start to save some money. So this was, I think, February or March of 2005 is when I started. And I started at a company called AmeriQuest, which was, I think somebody should write a book about that company one day, about all the things you shouldn't do. And I just was in the subprime business essentially from that point all the way through to, 2008, the end of 2008. And I was just managing call centers, refi guy. And then I luckily got a phone call to start the retail division for Bay Equity at the time. They didn't know that I didn't know what I was doing, but I needed a job. So I took it anyways and then kind of learned on the job. And then I saw fluctuations in the market and, I wasn't really in control of my own destiny. I had more of a job than a career. And I was like, you know what, I'm just going to get out of the business. I'm going to go get my MBA. I'm going to go to business school. I'm going to, just figure out another path because this just doesn't seem right. It just didn't feel like I was making an impact. Didn't feel like I had a lot of control.
What year did you get out?
I never actually got out. I was talking through this. I was talking to my dad, and he was like, "Why don't you give it one more shot? But this time go meet realtors and use your personality and have people send you business and kind of go that direction." And I was like, "I don't even know if that's a thing. I think you just send out mailers and do refis."
Because that's what AmeriQuest taught you, right?
Yeah, that's what I was at a subprime brokerage, and everywhere I was just you get leads or send out mailers and you refinance people. Like, don't do purchase loans; they take too long. All the basically 6 years of wasted time, right? Where I learned a lot what not to do, so maybe that's not totally a waste. But so I ended up luckily giving it one more shot. That's when I met the team at iMortgage, and they just opened an office in Newport. And then I walked in and I was like, "Oh wow, this looks pretty professional." I was like, "This looks kind of like something I can get my hands around." And that was the beginning of what I would consider my career, my actual, mortgage journey. Met my first realtor, did my first purchase loan, started my first database, just kind of from scratch.
Let's go back to the timeline now. So you started 2005. What year was iMortgage? When did you start that?
March of 11.
11. Okay. So you hung out for 6 years with not something so comfortable to you.
Well, not only was it not comfortable, but I just wasn't even aware that there was anything else, right? Like, that's why, people always ask me, like, if you could do anything, if you can go back and turn back time, what would you do differently? And I'd say I would seek out a mentor as early on in my career as I possibly could that I wanted to model my life and career after. And I just never was given that information. I didn't know that there was such thing as coaching in the mortgage business. I didn't know that there was like rankings or conferences. I literally just went to work every day, and I was 22, 23 years old. And so work wasn't even my main priority, right? It was really just living life, having fun.
So when you started in AmeriQuest, I'm trying to remember 2005. What was the market like? I think it was good, right? I mean, we were thriving at that time. You as a new guy, were you making money yet? Was this like money you had never before?
Right out of the gate, right? More money than I thought I'd make. I always thought I'd be successful growing up, but I didn't ever put like a measure on it. And I was making really good money immediately, and then great money shortly after when I got into kind of management and leadership of these different brokerage offices. And it was super easy, right? Didn't have to learn much, right? Didn't have to be all that intelligent. Didn't have to know much about finance. You just had to hustle and, but again, we were doing it all wrong, right? I mean, looking back, it was, all the things that you shouldn't do and shouldn't be. But it just gave me a false sense of how easy it was to, make money and, quote unquote, be successful, even though that's not the measure of success. And so that put me in a really tough spot come 2008. And I was in a really kind of dark place. Yeah.
So I'm curious though, I think I know who the Ryan Grant today is, but the Ryan Grant back then, were you out spending money like a drunken sailor, or were you still being conservative?
No. My dad did everything possible to teach me the value of a dollar. I was like, when I was young, I was clearing rocks out of our basement so we could build something in it for like a penny a rock. And every summer I'd be, under mobile homes, manufactured homes with the construction crew, putting these manufactured houses together up on the roofs in the heat, digging trenches. And, I'd always tell my dad, like, dude, I hate this. I don't want to do this. And he's like, well, go to college, get a good job, right? Like, if you don't, you're going to be, throwing around a shovel. And I was like, all right. But almost like anything else in life, it's really hard to learn by hearing. It's much easier to learn by doing. And because the money came so fast and so easy, I just always thought it was going to be there the next month and the next month and the next month. And so I lived that way. I bought a, $750,000 house, $100,000 car, and a $10,000 watch in the same month. Yeah, it was just, me being 23 and just thinking like, I guess this is just how the world works, only to later find out that's not so much the case.
And it's interesting. So this is part of what my goal is with the podcast, right? It's not just how to do better loans, how to make more money, or how to, get better at our trade, but it's also how to get better as a human, right? Because guys like you and I have learned from that kind of stuff. And I would love for us to be able to influence younger people that are just getting into the business, how to do it right out of the gate, and not 2008. Look, it was so rough. It was such a big one that, I mean, I know a lot of smart guys that were conservative that also lost everything, right? I mean, it wasn't an easy time, but it could have been done better, right? I mean, we could have done it better. So I'd love for people to be listening to this right now and saying, I need to take some advice from these guys. I need to learn. So just in case that happens again, I don't get stuck. Right. So
it just did happen again. Right. The last 2.5 years, it was really disheartening to me to to see, the mortgage industry. We had a 12-year run from 2010 to 2022 where it was just unbelievable. In the last 3 years, not, unapproachable from an income and opportunity perspective. And inside of a year, we're seeing mortgage professionals have to make really, uncomfortable short-term decisions. People selling their house, people, taking jobs or, signing bonuses with companies they don't want to, but they just needed that money and they couldn't stay independent. They couldn't stay, career oriented. And it was a shame, right? But that's our industry's fault, right? We haven't taught financial literacy and financial freedom to the people who need to be taught it the most, because how can we then teach that to our clients, right? There's no way I can tell someone, hey, I'm going to make you generationally wealthy, right? I'm going to move the financial needle in your life if I can't do it in my own life. And so that's one of our big initiatives right now with Neo Capital that we are really excited about. We just want to help people turn their monthly income into long-term assets and give a sense of financial freedom and security to our industry, so then we can pass that down to our clients.
Yeah. And save that, because I want to go into, detail about all the stuff you guys are doing. But let's go back to iMortgage 2011 now. What'd you do? I think that's about the time I started noticing you, being in Orange County. Just be honest, everybody. I mean, I freaking saw this good-looking guy on pretty much everything. Like wherever I went, I saw him, right? It's like he was just everywhere. So how did you do that? I mean, your numbers were great back.
I tell the story a lot. Actually, I was at the Utah Association of Mortgage Professionals event last week, and I told the story, but I didn't know what to do, right? Everyone else was refinancing their clients, right? It was 2011, rates were coming down. So everyone was doing all these refis and they had this book of business and they knew realtors already. I had nothing. And so I was like, hey, how do I get business? And they're like, oh, realtors. I said, okay, well, where do I find them? They're like, open houses, broker previews. So every morning, Tuesday, Wednesday, and Thursday morning, I went to every broker preview. And then I went to all the open houses after that during the week. And then I went to open houses on the weekend. I started kind of looking at, well, what's missing? What do people need? And, nobody had financing flyers at their open houses. So I created co-branding financing flyers. And I was just trying to be omnipresent. I was pretty early with social media in terms of, being visible in the space, right? So if I'd go to an open house and meet a realtor, I would take a picture with them and tag it, right? And then we would come up with these open house events where it was like, if you go to 5 open houses and you win a raffle and we have a party at the end. And I was just trying to be as creative as I could, because I didn't, there was nothing about me that was special or unique or different. I was working 14 hours a day. I was, shaking a lot of hands, kissing a lot of babies. And just through sheer showing up, right, and being visible, we did 11 million our first year and 100 million our third year. And I didn't know if that was good or not, or like if, what trajectory we were on. Because still, I didn't know there was rankings. I didn't know Scotsman Guide. I didn't know there was coaching groups. I didn't know about compensation or margins or more, any of that stuff. I just knew if I wanted to make money for my family, I needed to put my head down and do the work. And I think that's still true today in large part, right? But I think 90% of this industry is just showing up, right? And having the confidence in yourself. And my confidence back then was really unfounded, right? Because I had no better customer service than others. Back then, I wasn't meeting clients in person. We weren't doing, total cost analyses. We weren't doing video meetings. We were literally just talking to people on the phone, sending them good faith estimates, closing their loan on time most of the time. And, other than that, I was out there just doing a lot of business development. I think it was just a marketing play, really.
Were you a good loan officer?
Depends on what you define as a good loan officer.
So I'll tell you, I tell people that are new a lot, get in the trenches, learn how to be really good at your trade, and then put it aside and go out there and become a better marketer. Because if your phone doesn't ring, it doesn't matter how good you are at it, right? So you better know how to do it and figure it out. You don't have to be the best, because you can have, team members that are doing these different things for you. But you your job is to go out and make the phone ring, right? And I think that's what you were just exceptionally good at, right? And like you said, I think there's a lesson there for everybody too. He said just showing up. I mean, he was out there, he was doing all of it. And by showing up all the time, what did that tell everybody? That told all the realtors that this dude is on it. This dude's a workhorse. And that's who they wanted to put their money on, right? They wanted to put their money on that horse. So you did such a great job in those early years of being everywhere. And like I said earlier, it was literally everywhere I looked, you were there. and that was a good thing, and it's funny. I remember oftentimes the open houses and the broker previews. I didn't do it as often as you did. I did it kind of at one point in my life, but I don't think I ever got much out of it. Like, it just didn't work for me. But I always say, I think God rewarded me because I put the work in. I didn't necessarily get it from there, but I started getting it from a bunch of other places. Maybe because people saw me out and about and saw me doing stuff, right? But I do have to say one thing. You can't get there if you don't get out of the office. You got to get, at least back then, you got to get out of the office. Nowadays, you can do it through social media and it feels like you're out of the office, but you got to put yourself out there. You can't just sit behind the desk and do loans all the time, right?
Yeah, I would say, this business is less about being a good loan tactician and more about being a good marketer and business development leader. I had to, early on, I would be out in the field all day long, right? I'd literally, in the mornings, I'm at the pizza parlor or the JT Schmitz, and then I'm at open houses, and then I'm meeting with the realtor or, doing whatever. And then, from 2 to 5 or 2 to 6, I'm talking to clients, taking applications, that kind of stuff. And then from, 8 to 1 in the morning, I'm doing income calculations, running credit, doing pre-approvals so I can get back to people. So I had to learn every step of the process. But really the separator in this business is team building and leadership. Because there are thousands of great mortgage advisors that know how to structure loans, that know guidelines, that know, this is the best down payment and this is the way to use MI and this is how to structure, like so many of those. But like you said, that only helps if you have an infinite stream of business coming in. And so the unfortunate plight of the mortgage professional is the roller coaster, right? Go get business, work on business, go get business, work on business. And building a team and creating scale where you can help an infinite number of families and not work an infinite number of hours, that's kind of the secret that some mortgage professionals figured out and others didn't. And it's unfortunate that we don't have, which is another problem we're solving right now, but it's unfortunate that you can't just say, this is how to grow a mortgage team, right? And you don't have to figure it out, because I made every mistake you could think of. Hired the wrong people, paid them incorrectly, called them the wrong job titles, managed or mismanaged them or led them inappropriately. And I, if I could go back and do it over again, knowing what I know now, I think we'd have a much different outcome. But that's something that I think we need to fix in this industry.
I also think, though, there's a couple of things there that are important. One, you said you didn't even know what coaching was, right? So you didn't know. How could you know how to do all this stuff, right? But oftentimes making those mistakes is some of the best lessons you could possibly have, some of the best coaching you could possibly have, right? Now, I can tell you that there is an easier way to do things than going out and making a bunch of mistakes to learn from. You could seek coaching, right? And I know, and I want to get to it in a minute, but like Loan Atlas, right? It's, you guys are coaching. You're coaching younger loan officers up, even other loan officers that have been in the business for a long time that they just haven't been doing things the right way. With just a couple little tweaks here and there makes such a huge difference on not just your business, not just the possibility of making a lot more money, but the possibility of having a much better life, right? that family life that maybe you're not enjoying because all you do is work. And I'm curious, Ryan, 14-hour days, right? Where are you today? What kind of hours do you put in today?
Yeah, I was really fortunate that, when Bran was pregnant with Kyla early on, that's when I first got introduced to coaching and mentorship. And I got into an elite group with some of the best people that I still think are in this business today, many that I'm fortunate to work with today. And I looked around and I realized these guys kind of have scale figured out, right? They're not working 14-hour days. They figured out how to use teams. They figured out how to use systems and, create processes to give them, some semblance of balance so they don't, resent their business. Then I made that commitment to myself. I said, look, by the time Kyla's born, I'm going to have really figured out how to, help as many families as I possibly can in an 8 to 9 hour window. Now, it wasn't perfect at first, and it still is not. It'll never be perfect, right? But we created a team that allowed me to be where my feet are, right? So when I was working, I knew I had blinders on. It also helps when you have an amazing spouse and amazing support system, because you can know that they have that covered, right? And you just get to put blinders on for your 8 hours, do all that work, and then shut it down. And so, I've been a really, big advocate of 8 to 9 hours. Now, you're going to have some periods of, purposeful imbalance where, you're going to, do a short-term sprint to get something done. But I'll use mornings for that, right? So that's my 4 a.m. to 6 a.m. time before anybody's awake, where I work on like projects and that type of stuff. And so, it's an evolution. It always will be. It'll continue to be as their lives change and evolve, as my life changes and evolves. But that's a problem in our industry, that people can't show up as themselves every day because they don't have the energy to, because the phone rings on a weekend or 7 o'clock at night when they're at dinner and they resent it. They look at it and think, God, like I wish this didn't happen. And that's just a negative energetic place to show up to that conversation, whatever it is. So just creating a system where you don't have that feeling, where you can ingest as many calls and as many leads, as many inquiries as you possibly can, and just creating that system and scale.
I got to say, just for everybody listening, my personal piece on that, I worked a lot of hours and I was a workhorse. And quite honestly, I never got tired. I never resented it. I actually loved it. I was very fortunate. My wife was both accommodating and not accommodating, meaning she took care of everything Monday through Friday. I mean, she made me breakfast and lunch, snacks. I had everything planned out. I didn't have to do anything other than, like Ryan said, blinders on, right? And I was able to just put my head down and work hard. But she wasn't okay with me being on my phone all the time at night when I got home. And she wasn't okay with me working on the weekends. So I worked my tail off Monday through Friday. I never worked on the weekend, with an occasional call here and there, but that's about it. And I would check my emails when I got home often. I wouldn't always reply, but that was like a weakness I had, right? And then through coaching and through masterminding with an elite group, right, I learned a lot about what they do. And number one, if you respond to something late at night, you're now telling everybody that you're working, and they can keep doing that over and over again. So I had to stop that. Like, that was a thing I had to stop. Another thing that was super important is I had to stop going through my own email. Somebody else had to do it. And if somebody else does it, I'm telling you, it's like one of the greatest things you'll ever get to, if you could get yourself out of checking your email every single day, right? And then finally, I got to a place where I was working about 60 hours a week, Monday through Friday. I got to a place where I said, I'm semi-retired. I don't mean financially, I just mean hours. I'm only going to work 30 hours a week. And it sounds like, hey, that's cool, but it took a lot of work. And the only way to get there is, I told myself I have to get there, but I have to accomplish the same amount of work I did in 60 hours but I have to do it in 30. And that seems impossible. I mean, that's 30 hours. But if you time block properly, and if you have other people doing other things, it's actually feasible. And man, I'm telling you, like 30-hour work week was I'd go golfing once a week, which I hadn't done in like 10 years. I was taking my kids, I should say, to karate at 3:30 in the afternoon, which 3:30 in the afternoon for me was never an option. That might as well have been like midday, you know? And I was doing infrared saunas all the time and, you know, golf lessons once a week. I mean, it was a game changer in life. It was so enjoyable all of a sudden. And I highly encourage everybody out there who's struggling in any way to seek coaching, seek mentorship, because you will learn so much from guys like me and Ryan who have been through it all. And it'll change your life in a much faster way than what maybe him and I did, right? Of having to make all those mistakes. So Ryan, let's fast forward now, skips through some of those other things, and let's get to, how did you end up with Neo, right? Like, what was what took you there? And I know you have some partners in there, which are all studs as well. How did all that come together?
Yeah, a lot of it was just through necessity. And so, you know, in 2018, I was one of the top 25 mortgage professionals of the country, you know, number one in Orange County. And if you would have asked me what I did for a living, I would have been like, I'm in the mortgage business, with that much excitement, energy, and passion. And people would be like, well, why? Like, you don't seem too pumped about it. Are you pretty good? And I didn't have a lot of pride, and I wasn't inspired by being praised for selling more debt to people than others. You know, I look back at the clients that we gave mortgages to, and I notice I don't say clients we helped, because I don't think the mortgage industry actually helps people. And I think that's a misconception that we need to solve. I just gave them the debt that they needed to buy the home. And if they didn't get it from me, they were going to get it from somebody else. I didn't convince them to do that. I didn't educate them to buy a home. They just decided to buy a home, called a realtor, and the realtor referred them to me. It's like, you know, saying that your pharmacist helps you. It's like, no, they don't. They just fill your prescription. And so I look back and I saw people mismanaging their equity. I saw them going into debt after we got them out of it. I saw them not taking advantage of or missing opportunities in the real estate market. I saw them not understanding generational wealth with parents and children, not understanding credit or debt or leverage. I'm like, what am I really doing? Right? I'm just giving people loans, and then the rest of their financial life and real estate life is up to them. And I saw so many examples of people that could have done really amazing things if they had guidance. And, you know, in 2018, end of 2018, rates spiked for the first time, and we started losing clients left and right to rate. You know, at 3%, they didn't really care about rates. They were pretty good. At 5%, which they hadn't seen since, you know, 2008, people cared a lot more. Right? Customer service became less important. All the things became less important. And I was like, I don't want to compete on the same playing field. Like, I don't want people to see my product or me as the same as Johnny, loan officer at XYZ mortgage company, right? And I was like, we got to do something about that. And then we had a client whose husband passed away. They didn't have life insurance. Her and her two kids had to sell the home. And that haunted me for a long time. Like, that was really my fault, because I'm a husband, I'm a father, I own a home, I have a mortgage, I have life insurance, because somebody taught me the importance of that, right? You can own a home and then you can be a successful homeowner. Most people just own a home. And I thought, I don't ever want to be $1 more expensive than the cheapest lender on the planet unless I can quantifiably show someone how we're going to help them become a successful homeowner and holistically work towards a better generational wealth profile. And so I started a company called The Art of Homeownership back in 2018, initially just for my team. And it was insane. Like, when you can get someone's scope of vision to move out from 30 days and move out to 30 years and show them what's ahead, right? Show them the hurdles, the decisions, the questions, the opportunities, like show them what it means to be a successful homeowner. It scares people. And that's when we realized wealthy people aren't wealthy because they have money. They're wealthy because they have information, and that people in their life committed to giving that information. So I said, well, this can change the whole industry, right? Like if we have enough people doing this, the whole click button, get mortgage, or, just get a cheap loan will be debunked. People won't stand for that anymore. They'll say, look, I want all the things that this company has to offer, right? Or this team has to offer, because no one's ever become wealthy by saving a quarter point in their mortgage ever, right? Same thing goes for real estate now. And so I was at a company at the time. I took it to them, and unfortunately, they looked at it and they just said, "Look, this is great, but can you dumb it down, because most of our team is going to have a trouble actually doing this, right? Because again, we don't have a high level of financial literacy in the mortgage space, right? We don't understand holistic personal wealth. We don't really train outside of mortgage and mortgage planning." And that really was a kind of a pit in my stomach, because that was one of the largest companies saying, "Can you lower the bar, right, for what it means to be a mortgage professional?" And I was very much on the other trajectory, right? I want to raise the bar in the mortgage industry so high that if you weren't offering everything we were offering, if you weren't going to change that client's life, I didn't want you in it. And so that was kind of the initial push. Danny Hirani, who was at a different company at the time, we happened to meet in our coaching group. Same thing with Josh Metal, Chris Ledley. And we all kind of started talking about, like, what would it mean if there was a mortgage company where the DNA of the company, or the just cause of the company, was to change the financial profile of clients' lives. And we realized our industry had the greatest opportunity to do that, because 92% of America is not going to have financial planners, right? They're not going to have CPAs and estate planning attorneys, and they're all their information is do it yourself. And so we said, well, almost everyone in our country at some point of relative means is going to raise their hand and say, I wonder if I could just buy a home, which means our industry has the greatest opportunity to change the most families' lives. But we saw that it didn't work team by team. Even my team, who was big at the time and had a lot of resources, even I couldn't perform all these things, right? We needed institutional technology, right? We needed, separate teams of client success managers. We needed the right economic model, right, to really reinvest that revenue back into the client. And then 2020 happened, and, no one was planning on starting a mortgage company at that time. But when we saw the disconnect in economics, right, from retail to retail mortgage advisor, that's when it all became really clear, right? That we thought we were business partners to a lot of our companies, but they saw us as employees and treated us that way. The financials just completely got skewed to the favor of the mortgage company, and we said, well, there's no way that the mortgage professionals who are on the street out there, doing the work, there's no way that group of people can make the impact they want to make if they don't get the upside of the economics, right? And so we looked at the economic profile, we looked at the value proposition. We realized that there wasn't really any companies out there that had a high level focus on training and mentorship and leadership. If you wanted that, you oftentimes had to just go outside of your company and find a coach, or become part of a mastermind group. And we said we can, obviously with the group of people that we had kind of established at that point, we knew we could solve that. And ever since then, we started at the end of 2020. We've just been continuing to look into the future and saying, what are the problems 5 years from now that we could start solving today? And that's where Neo Capital comes from, Neo Owner Suite comes from, Neo Experience, which is the value proposition, the Neo business model, which is how I think is the number one economic model in the industry. All these things just keep iterating, because we realize there's a lot of issues, and we can't solve them unless we have a platform to do it. And so that's where kind of the genesis of Neo stems from.
In your first year starting Neo, how many loan officers did you guys have?
I don't know, probably 150, 160.
So you landed some right away. I mean, that's quite a few. And then how many years have you guys been in business now?
It'll be 4 years at the end of this year.
How many loan officers do you guys have now?
170, 180.
Okay. But I'm sure, you cycle through all the bad ones and ended up with the good ones.
Yeah. You learn a lot of lessons along the way. Like, it's really hard to take someone who has been conditioned to be an employee their whole career and ask that person to be a business owner. Right? And it's really hard to, get someone who has climbed the mountain and then slid to the bottom of that mountain to tell them they have to climb another one. So we had a bit of a blessing and a curse in the sense that, we had about a year of, low rates, good opportunity. But the curse of that was people's expectations were wildly off, right? In terms of when you see rates go from 3 to 8, most people can't turn into a business owner fast enough. Including us. Like, we learned a ton of lessons along the way. Like, we had to get a whole PhD in secondary markets, in secondary, product and capital markets. To us, that was the missing link that created the full transparency and business partnership model. We had to learn, how to lead people through the most challenging time in the industry. 2008 was hard, but there was still, low rates and a lot of homes. This is, infinitely harder when there's no homes and, nobody wants mortgages. And so, we also made the commitment that we are going to grow very intentionally. We have 2 rules, to be at Neo. 1, you have to believe what we believe, right? And be willing to do that work. And 2, no assholes. You'd be shocked at, how those 2 things combined can really, narrow down the talent pool. But we're really fortunate. We are finding a lot of really great leaders and teachers and educators in this space. And
is there like one person at the company that's like the asshole leader that everybody has to go through and he or she gets to determine?
We just have a really cool onboarding process. It's pretty intense. Right? We have multiple calls. We have multiple meetings. We show them the Neo experience. It's kind of like have you ever heard how Apple hired people back right when they launched the Mac?
Explain it to everybody so they can hear what it is.
Yeah, so they had problems that they were hiring people, realizing they were hiring a bunch of mercenaries, right? People that were just there for the money, and their culture was suffering from it. And we learned that lesson pretty early on as well. And as we evolved, we realized, the same way that they would say, all right, let's get them through the whole process, and at the end, we're going to sit them in front of the Mac, and we're going to watch their reaction to it. Right? And if they were just like, oh, that's great, how much do I get paid? They wouldn't hire that person. But if they sat them in front of the Mac and their eyes bugged out and they said, wow, like, this technology is going to change the world, they'd hire that person. We do the same thing at Neo, right? We show them the Neo experience. We show them the economic model. We show them the way that the owner suite works and the way that the Neo capital works. And we just judge the reaction. And then we do a whole Neo day where they meet with every team leader or every division leader, and everybody gives feedback throughout that day. And I think we probably collectively pass on about 8 out of every 10 people we talk to. But that's good. To me, that means we're doing it right. It's not easy from a competition perspective because, just like most companies, we'd like the volume and the production, but not at the expense of, what the brand means to everybody here today. And that's really what we're protecting.
Yeah, I love it. So you've touched upon some of the stuff, but can you go into more detail? Because I want everybody to understand what the loan officer of the future is and how they're a business owner, right? I mean, you have all these different suites. So go into a little bit more detail of what they are, but also why you think they're so important for a loan officer to do this.
Yeah, so there's 6 things that we saw in the space where we said, well, if we can solve these things, this is the mortgage professional of the future. The first and most important is the value proposition, right? When somebody is talking to you as a mortgage professional and they say, Dino, why would I work with you, right? ABC's a quarter lower, XYZ's, half lower. At the end of the day, it's just a mortgage. Like, why you? It's crazy how many mortgage professionals can't confidently answer that question, right? So what we do is we say speed, customer service, close on time, relationship, communication, education, right? We know all the right things to say. Problem is, so does the cheap person, right? Everybody knows the right things to say. And we've conditioned the client to just think, I just need the cheapest rate and the cheapest cost. Because at the end of the day, the product is the same. And we want to completely change the way that the consumer thinks about that. And so the Neo experience is the answer to the question, why you? Right? So when someone asks us that question, it's like a ball on a tee that we're ready to hit out of the park. And we let the client know, look, our clients don't choose us because we're the cheapest. They choose us because we're going to be the most valuable team of people in your life, not just for the next 30 days, but for the next 30 years in every aspect of real estate and finance. And we don't just tell them that, we show them that, right? We show them how we're going to help them before, during, and most importantly, after the transaction. And again, we can get someone to zoom out and realize, oh, I didn't know that before part was so important. I didn't know the during part was so not important, right? It's really anybody could do, but that's where the industry focuses all of its attention, right? And then I had no idea about the after part. And I had no idea that mortgage companies even cared about me after the transaction. And, we have a tall task because the mortgage industry has never cared about anyone after the transaction, other than maybe trying to get a refi here or there. And so, the Neo experience gives our team the confidence to stand in that space and say, look, you're thinking about this all wrong, right? Let me show you what you really need. So that's probably the most important one. Our economic model.
I'm going to throw something into that as well, because something that I think a lot of people probably don't understand is, like Ryan was saying, he's like, it's always about the during, right? That's what everybody thinks about, is the during. I would venture out to say that the majority of the money is made in the after. I know it doesn't seem like it because you only make your money when you're in the during, but when you do the after the right way, you will have an abundance of durings all the way through the rest of your career, right? I mean, I think that's what it boils down to at the end.
It's where the most impact is made, right? And impact determines your success, right? How much positive impact are you ascribing to each one of the families that you've committed to serve? And if they can look back a year from now, 2 years from now, 5 years, 10 years from now and say, Dino really changed the trajectory of our family's life. You get enough of those people, you never have to show up at an open house again, right? Business development becomes real easy. But impact is not made with the application. It's not made with the pre-approval. It's not made with closing the loan. Anyone could do that. And we keep trying to convince ourselves as an industry that that's the important part. But again, we've never had anyone say anything differently. So, this is the change.
I say a lot of times that, it's kind of a must have. Yes, you got to be good at that. Yes, you should be able to close quick. Yes, you should be able to have good rates. Yes, you should be able to talk to a client about certain things, right? But you shouldn't even be doing this job if you can't be doing that, right? It's so much more than that. And like you said, it comes after, right? First of all, are you staying in touch with your clients? It's just that simple, right? I mean, are you purposely doing things to stay in touch with your clients? It's shocking to me how many loan officers don't even do that because they think the moment's over. They got their check, it's over. That doesn't make any sense.
Well, I've uncovered the philosophy of it, or the psychology of it, and I studied it on myself. Every day in my earlier part of my career, when I really wanted to do this, I wanted to be this person, right? I made the mental shift in my head that I'm going to be valuable to my clients post closing. I had past client database calls. I didn't know what to say to them, right? Because I didn't have a refi rate for them. And B, it was energetically unappealing, right? So that time block would show up and I'd be like, oh, I got to clean my desk, or I got to do this, or anything to go make those calls, because there's a, kind of a hunter-gatherer mentality, right? And I call it hunting and farming. Farming is slow, it's tedious, it's planting seeds. It's not, you don't get high highs and low lows. It's just super steady and consistent. Hunting, on the other hand, is, there's a lot of pride and energy and excitement around that. most mortgage professionals are hunters, right? That's how we're built. So to ask us to go from hunting, and then stop and then turn around and go plant seeds and farm is nearly impossible, right? And so what we realized is, okay, if it's that hard, let's just get an entire division of the company to do it, right? So we have a team of client success managers that everyone on our team is, assigned to their team. And they're the ones doing the post-closing calls, the 90-day calls, the 6-month follow-ups, the annual financial reviews. And they are infinitely better at it than we are, right? Clients create a relationship with them. They're now an extension of the real estate agents team because they're doing it on behalf of them as well. And they just farm all day long and they love it. And it's energetically appealing to them and they're compensated well. But because they're an extension of the mortgage advisor's team, they get all the benefit of it. Right. And so to me, that was a big aha that really helped with that.
Awesome. So then what's the second big value or value adds number one? What's the second thing you guys have done?
Yeah, the economic model is really important. This is, everybody keeps talking about, brokers and bankers and brokers are better and bankers. It actually is not binary, right? It is very much finding a way where, look, the mortgage industry has done a fascinating job turning a lot of self-motivated, self-starting, entrepreneurial, independent people like you and me and others. They've done a phenomenal job at teaching us that we should be employees. Now, some of us say, well, I don't want to be an employee, so I'm going to go to the broker world. You're still an employee. You're just a contracted employee of the wholesale company. And we saw this in 2020 when, margins went through the roof. Now, 2018, margins got compressed, at least for the first time in my career. And my company comes to me and says, hey, margins are compressing. We're going to have to lower comp and do this and that. You're going to have to lay people off and cut back. And I was like, look, I don't know what you're talking about. Nobody's taught me any of this stuff. So I'll do whatever you say. Well, then 2020 comes along and margins go through the roof. And I start to uncover what real raw pricing from correspondent lenders are. And I'm realizing there's 600 basis points in the conventional loans and 1,100 basis points in the government loans. And I'm getting the same amount every time. Right. And this isn't usury. It's not taking advantage. It's just when there's a line wrapped around the building and you can only serve so many steaks, you just raise the price of the steak. And I realized this whole business model is set up to keep us, the people out there generating the business, in a consistent income model with the downside risk. All right. So imagine I come to you, Dino, and I say, hey, you want to start a business? And you say, well, what do you got? And I say, well, here's the deal. When the times are really tough, we're going to struggle. We're going to have to cut back and make less. Most entrepreneurs would say, no big deal. It's just what you do during hard times. Well, here's the kicker. When times are really good, all that upside revenue, we're going to give away to another organization. You want to start that business with me? Everybody laughs and says, no, I wouldn't do that. Like if I'm going to be a business owner, I want the upside. Well, the answer is every mortgage lender in the country, both retail and broker, are signing up for a business model that does not allow them to take advantage of the positive, higher yield times. And so we said, we can fix that. But we need full transparency and we need full partnership in this. And so in our model, we pass every basis point of raw pricing through to the business owner, which is the mortgage professional. And then we just share it on a percentage basis, right? So, 75, 25 up to 90, 10. And then we give all capital markets up to 75% to our business owners as well. And that keeps us incredibly aligned, right? Because we can't play any games. As margins start to expand, they get that margin expansion, not the company. And that has created a world where not only are we confident in our value proposition, but we're incredibly confident in our economics and our price. Doesn't mean we're the cheapest, because that's up to the business owner. Right? If they want to go get aggressive and try and compete for a deal, they can, and we go there with them, right? So if they're struggling, we're struggling. And then as they're winning, we get to win with them, but they win disproportionately more. And that business partnership model, that economic model, drives so much more revenue, right? That typically would go to the parent mortgage company. It drives it to where it needs to go the most, right? Which is the business owner who's on the street doing that work. Not so they can go buy houses and cars and watches like I did, right? It's so they can build a team, right? It's so they can scale. It's so they can reinvest back into the value proposition that we deliver to the client, the technology, the team, the infrastructure, the systems. And that whole thing is a flywheel. But if you are operating off of, 100, 150, 200 basis points all in, you're just not going to make as big of an impact. You'll be cheaper. So you'll be cheaper for the people that get a loan with you, but then everything else is going to be up to them in their life to figure out how to become a successful homeowner. And if you just told them, hey, like, if we weren't the cheapest, we could help you in ways that you would never imagine. People sign up for that. People want that. Right? They just don't know it exists. So we're all driving each other to the bottom.
Yeah, I love that. And, you could give somebody more on the upside times. But like you said, it's not about going out and buy more expensive watches and cars and all that stuff. And that's where I think your guys' coaching comes in and trying to help everybody make these right moves at the right time, because our industry is really life-changing. It could be if you manage it properly, because this kind of money, guys, for all of you listening right now, especially for some of you that are new, you can't make this kind of money going out there and doing other stuff. This is unbelievable money, and it's life-changing. So take advantage of the right times and put it away the right way in the right investments. Listen to guys like Ryan and seek coaching, because we all of us can't be good at everything, and figure out the things you're not good at, and then go out and seek advisors to help you with that, right? Like, get better at it by seeking help. I mean, would you agree with that, Ryan?
100%. The best thing, if you're a mortgage professional and you're listening to this, the best advice I can give you is to do a full audit of your business, right? And that's why we developed these 6 kind of key audit points, right? Audit. When someone asks why me, does that give me anxiety, right? Does that put me on the defense, or am I waiting for them to ask that question so I can knock it out of the park and have their brain explode when they hear all the value that I'm going to give them, right? At audit, are you in the most appropriate economic setup, right? Like, this isn't just the mortgage industry. This is any business owner. If you are a business owner, which if you're not getting leads from your company, right? If you're not working at a place where business is handed to you, then you are a business owner. Right? Now, are you in the right economic model as a business owner? If you're not doing a service for your clients, for your team, for your family, right? You're just kind of accepting, well, I'll be an employee just because it feels okay. Right? Like, that's not what really responsible business owners do, right? They find the economic model that's most appropriate for them. And then ask yourself, do I have a plan to help as many families as I possibly can? Or am I going to be okay helping 2, 3, 4, 5 families a month in perpetuity? And that has to do with team building and a blueprint for team building. Right? So exactly who you hire, when you hire them, based upon your leading indicators, what their job responsibilities are, how you interview them, how you pay them, how you train them, how you onboard them, and then how you lead and manage them. If that is not clearly defined in your business, and you just have to kind of muddle through it as you go, again, disservice to yourself, to your business partners, to your clients, and to your family, right? Because you're going to be the one working 14-hour days. Your company or your mentor should have that information. You should not have to find it or create it on your own. Right? And then a big one is, how are you taking, and this one is really kind of important on my heart right now because I've seen it and I've been so disappointed by it in the last couple of years. How are you turning your monthly mortgage revenue, right, your monthly income, into long-term assets that your family can count on when your mortgage income is either no longer there or you don't want to be in that space anymore. And this is, again, it's our industry's fault, right? We haven't had any leaders preaching this, right? We just hope people figure it out, and they don't, which is why every month we wake up and start at zero. Like, we could be in this business for 20 years and wake up on our 21st year starting at zero with no enterprise value for the business that we've built, no way to sell it, no way to capitalize on it long term, only one stream of variable uncertain revenue. And so we've solved that by creating 4 revenue streams and creating what we call the Neo Owner Suite, where you can succession plan and scale and sell your business when it's time for you to succession plan to whatever's next. But you need, we have recurring residual income through banking, through insurance, through mortgage, and through Neo Capital, where you actually have books of business, like an insurance person would sell his business or a financial planner would sell their business. We need to stop waking up and starting at zero. Right? We need to build something that has enterprise value that someone can buy and scale, just like if you sold a sandwich shop or you sold a tech company. It's insane, the fact that we're literally working so hard with just a cliff at the end whenever we want to stop. And so we're working hard to change that.
So I agree, man. And, honestly, I think you guys and myself are really the only ones that are trying to do that. We've been investing a lot of money. We're building what we're calling our MUM, and it is our version MUM, Mortgages Under Management, and it's our version of the Owner Suite, where there's a grouping of them, right? But the MUM is the one I'm the most excited about because, and it sounds very similar to what you guys are doing, and it's industry changing because nobody else is doing this in the industry, right? But I always say, you're only as good as your last deal. I mean, how many times have we heard that? You're only as good as your last deal. And I can't stand the fact that everybody buys into that. So first of all, I'm doing loans for the same people I've done 25 years ago, right? So that's not true. I'm not only as good as my last deal. But if I ever want to retire, if I ever want to stop, right, what happens? What happens? If I can't sell it, right? And if you're not a business owner, you really can't sell it. And even if you are, a lot of times you haven't structured things properly. So it's unsellable. But imagine doing things the right way so that you could have a value or an asset that you're building with every single loan that you're doing, right? And that, so much of what you guys are saying resonates with me because it's exactly what I feel. And all of it really goes back now. Okay, the loan's done. What happens in the after? What happens not just over the next 3 months where you're still trying to get referrals from the people, but what happens for years and years and years and years after you fund that deal? And if you don't manage that properly, you can't ever expect to have an asset or a book of business that you can sell. I mean, there's a reason why a financial planner and an insurance guy, a lot of times, why they can sell their book. It's because they have a much better after than you have. Like, think through that, guys. I mean, if you're doing loans, it's not just fund the loan, get your paycheck, and go buy something. It's way more than that. And that's why, Ryan, I was so happy to have you on today because, you're one of the visionaries in our entire industry that not only sees that, but is actually doing something about it. And I'm super excited. I mean, I'm trying on a much smaller level. You guys are way ahead of me on all this stuff, but I finally decided, in my semi-retirement that I talked about, earlier, right? I think by not working as many hours and actually being out there having fun and farming on my own level, it got me thinking about stuff. And all of a sudden I realized there is so much more to do. And now I'm right back at it again, but a little more controlled, not like I used to. Right. And I'm really happy to hear like how much you guys are doing. And I won't even deny that I'm even trying to copy a lot of the things that you guys are doing because it's the only company out there that I see doing it the right way. So kudos to you guys, man. I'm really excited about that. And I'm super happy that you came on here today. And if anybody wants to get a hold of you or ask you more questions or is interested in working at Neo, how would they do that?
Best way to not flood my inbox and have my team, have to circle is just connect with me on Instagram. It's just at the real Ryan Grant. I do a lot of video content, a lot of this stuff you'll hear. Unfortunately, I have to say the same thing, 20, 30 times a week because it's a new concept, right? It's a new philosophy and, hearing it once isn't going to work. But I would love to connect with anybody on there. And, to your point, man, I love the fact that you're copying what we're doing, right? Because that's exactly what we need. Like even Neo can't change this industry on its own, right? We need ethos and we need XYZ company that's going to come next to say, yeah, like that's the way it should be done. And over time, we will win. Like we will feel like we have accomplished our just cause when the average person who doesn't have means for a financial planner, doesn't have means for estate planning attorneys and all these other people, right? All this great advice and guidance. When that person says, I'm really glad that my mortgage company is helping me year in and year out navigate the changes and evolutions of my life and work towards a better financial future. That's what I want our industry to be known for. We have every tool to do it. We have every opportunity to do it. We have every input, right? We have people coming to us consistently. Right? We just need to tell a different story as an industry. And when they realize that the cheap mortgage, unless they already have all those people, unless they're maybe part of that 5 to 8% who already has everything buttoned up, then sure, get a cheap mortgage, don't talk to anybody, click button, get low rate mortgage. That is going to work for some people. But for most of America, that is not going to help them achieve the number one reason why they're buying a home in the first place, right? They want to grow wealth, and this is their only opportunity typically to do that. So I want you to copy what we're doing. I want others to copy what we're doing. I want us all to, share the same message, wave the same flag. We can wear different jerseys, right? But let's not let click button low rate win because we know that does not translate into the best interest of the consumer long term.
Absolutely. So guys, Ryan Grant, Neo Home Loans. My name is Dino Katsiametis from Ethos Lending. And like I said at the beginning, we're here to empower, equip, and educate you guys the way lending should be done. Thanks again, Ryan, for coming on.